I'm Bill Acheson, Chief Financial Officer of GWG Holdings, NASDAQ symbol GWGH, and today we're going to talk a little bit about correlation. What is correlation and why is it important to you as you look at your investment portfolio? Finally, we'll talk a little bit about life insurance and correlation as we wrap it up. So first of all, what is correlation? Correlation is simply the concept of two or more things moving together. So think of two investments that you might have. If those investments perform similarly in price over time, they would consider to be correlated. So why is correlation important? Well, correlation is important because over the long term, you'd like to have a portfolio of investments that has non-correlated assets in there so that all your assets or your clients' assets are not moving in the same direction at the same time. Now that might be great in an up market, but that's less fun in a down market. The other thing about correlation that's important to know is that correlations change over time. So two investments that may be correlated today or might have been correlated over the past year, let's say, all of a sudden may not be correlated. And so correlations can be difficult to spot and certainly very difficult to forecast. Another good reason why having some non-correlated investments like life insurance is important in your portfolio construction. So let's take a kind of a concrete example. We'll look at some investments and some correlations and do this in a graph, a little bit of audience participation. So on this first graph, what you're going to see is you're going to see a red line and you're going to see a black line at the top, and then you're going to see a line at the bottom. The red line is, in this case, the a master limited partnership index, which is an index of traded stocks in the master limited partnership field, which is typically oil and gas. The black line is a mystery graph, so you have to guess what you think that might be. And the bottom section of the chart simply measures the correlation over the past 2 years. If it's above the middle line on that graph, it's correlated. If it's below, it's not. And what you'll notice right away is that this one's had shown a fair amount of correlation over the past couple of years, although it's been changing, and most recently changed quite a bit. So let's take this first one and see if you could maybe guess what the MLP index might be correlated to. Would it be, say, the stock market? Could it be the bond market? Could it be the price of oil, perhaps? Well, if you guessed high yield bonds, you guessed generally right, which makes sense when you think about how master limited partnerships and oil and gas drillers fund themselves. Okay, now that we've been through the first one, let's look at another one. This one is the Wells Fargo Business Development Company Index, or BDC. Now, BDCs, as you may know, typically lend to smaller and middle market companies, and they typically lend in mezzanine or equity, which means there's some risk associated with it. Now, again, the same rules apply. The red one is the Wells Fargo Index. The black one is the one that you need to guess. And at the bottom, you can see the correlation history over the past couple years. Again, this case, fairly highly correlated, although with some recent changes in the last month or two, which again, kind of highlight the feature I talked about earlier, which is that correlations can change and change quite suddenly. So let's do it again. What do you think a business development company index might be correlated to? Well, it's a little bit of a trick question, but if you guessed high yield bonds, you would have been right again. So finally, let's look at this last one. This is a 10-year chart of the Vanguard traded REIT index, REIT for Real Estate Investment Trust. And again, the same rules apply here. Now, this investment, the mystery investment in the black line, has been very highly correlated over a decade to this investment. So if you think about correlation as it relates to real estate, what could that be? Could that be interest rates? Could that be S&P 500? I just gave it away. That's exactly what it is. It's correlated fairly highly over the past 10 years to the S&P 500. So as we wrap it up, correlation is simply the tendency or lack thereof of two things, in this case investments, to move together. Having a degree of non-correlation in your portfolio is very important, which brings us to life insurance. Investing in life insurance has many great features, one of the most important of which is the fact that it's non-correlated. What simply all that means is that the value of your life insurance investment comes from the actuarial performance within the portfolio and does not come from, let's say, the price of oil or the high yield bond spread or how the S&P 500 might be doing over a given period of time. All right? And so that's correlation. I'm Bill Acheson with GWG Holdings, and thanks for your time.